Midweek stock market update. Take 3, would you believe? Yeah, I'm starting to get a bit annoyed with the stock market. So here we are. Price earnings ratios, all expensive. That means you're paying $100 for every dollar of profit in Amazon. It means it's expensive and it gives the market an excuse to sell out. However, banks are cheap, energy is cheap. What does that mean? Well, I'll come to that in a second. Remember, during all of this, I will be looking at not just the charts, but I will indeed look at other factors such as valuation, growth, income, cash flow, momentum, because that is correlated to upward price moves. What about price earnings growth ratios? Well, I'm going to come to those, but first let's look at performance over the past week. It's been horrid everywhere in the market, lots of red. This is price earnings growth. You want it to be below 1. Only Berkshire is below 1. Everything else is expensive and gives the market an excuse to sell. That being the case, how have we performed so far this year? Given that I've got some students of mine on the Great Investments Program who looked at the NASDAQ and cherry-picked largely out of that, and they're up 100%. Others who took out of the S&P 500 are up about 20%. The NASDAQ peaked at 44% up. It's now up 32%. The S&P peaked at about 20%. It's now given half of those gains away. It's up 11. So we still want to cherry pick, but we've got to be careful. What do we do in a downward trend? Well, let me explain exactly what we do. Let me just erase all ink from there. Now we are here. We are in a downward trend, most definitely with this, okay? With the S&P 500. So I want to have a look at these two indicators, which are measures of momentum. They are the stochastic, weekly and monthly, and they are the MACD, weekly and monthly. Now the weekly is pointing down. That's not too good. The monthly, and I don't use these the way the textbooks do, is sideways, okay? It's a little bit like this scenario, and my fear is we could end up further south. However, it might be a bit like this scenario where any falls are short and sharp, and then we have a V-shaped recovery. Now, it's too early to tell, so you'll watch me on Friday to make that decision. What's interesting is when we look at the individual stocks, and I'll just do the FTSE first. I still see that going down, by the way. So that deals with that. When we look at the individual stocks, like Apple, for instance, then what we find with that is we've got a bit of a base and the weekly can fall. This can still stay, even though it's falling down, it can stay above its yellow line, its own moving average. Now, if it falls below that and does something like this, then it's really negative. Okay, and I won't be best pleased because it'll probably mean we're going to have a year of sideways moves, and we may well get that. At the moment, we're closer to this, so the market hasn't decided what's going to happen, and indeed, it could end up something like this, where the falls don't last long and it goes up. Most likely we're looking at sideways till the end of the year for the moment, right? October does tend to be positive, however, for Apple, and this is the story for a lot of stocks. So what you really want to do, and I'm educating you here as well, I'm not just giving you the information, I'm educating you. You want to look at the various directions. Excuse me, that'll be Warren Buffett there. You want to look at the various directions in which the MACD is moving. If it's moving down, it's negative, especially the monthly. However, has it crossed below its own moving average? Let's look at a bit more here. Okay, this is what the analysts think, by the way. 15% to the upside if the price goes from where it is to the average. Alphabet, upward trend is intact. You can look at those two, and I can see that's more sideways. Does it mean we're going to get something like this? No, doesn't look like it at the moment. It could do, or will it be more like this? And that's really what the decision is. And we don't know yet. I do not even know yet, okay? I know October and November tend to be fairly positive, and most banks are saying buy. Well, they would, wouldn't they? Right? And on average, the analysts think the upside is quite significant. What about this? Well, that's where we are with this. That's where we are with this. There's an upward trend. That's there. This is the weekly move. It's likely to go continue downwards, but this is going sideways and it's above its own signal line, so it's negative. But if you are like me, and this is where it gets really important, now listen to this carefully. If you are risk averse, then you would have got out already. You'd have to be risk averse and say, I'm willing to trade my investments. I'm going to get out. I appreciate the risk is more work and I might miss some of the gains when it goes back. If you're more risk loving like me and say, well, I'm in this for a bit longer, so I'll just wait. Let's see what happens on Friday. That's why I do these updates twice a week. And if you're more risk loving and you're an investor, don't want to trade your investments, then you'll just leave it alone, but you might just keep an eye on it. Okay. You won't panic by short-term moves. And that's where we are with that one. So with me, I'm keeping hold of it for now. Let's see what happens. The analysts think 26% to the upside. Amazon, similarly, even though it's fallen, I'm not looking to trade my investments, and therefore I'm keeping hold of it. There you see, that's the direction that's likely to go, but this is still sideways. When it falls downwards, that's a bit more negative. When it falls below its yellow line, that's really negative, because then it becomes more like this. And that's the point at which an investor, more risk loving, may well sell. When this blue line crosses below the yellow signal line, is probably more likely somewhere like this, and then get back in when it starts rising again. Okay, and we're not at that stage yet, and still the analysts think 34% to the upside. Disney all the way down here. Last time it did that, it did this. Too early to get in. Don't get excited. Okay, that's all flat and sideways, and that's where we are with Disney. Nvidia flat. And you can see that's likely to go this way. So if you're risk averse, you may well say, bloody hell, the last time that happened, it was this, January 2022, and it's a repeat of that, and we're about to get this. So risk averse would sell out, take all their profits. This is why I do these broadcasts twice a week, because hopefully somebody will bloody well listen. If you're more risk loving, you might say, oh, I'm in for the long term. I don't care. It might drop 50%. Actually, it'd be more, from 400 back to 127. I don't care. You will care when it actually happens. I'm not saying that's going to happen, but you've got to decide what your risk appetite is. The analysts think 52% more to the upside. So you might say, if it drops 10%, I'll sell 20% of the stock. If it drops X, I will sell Y. Work out what X and Y are for your risk appetite. Only you can solve that equation for your risk appetite, and that's how you do it. Tesla is in this direction. By the way, if you've enjoyed, and I'll continue with this in a second, if you've enjoyed the educational part of this, have a look at alpeshpatel.com/links. That'll help you a lot. Okay, so where are we with the rest of this? Upward trend. That's going sideways. That's going down. Not particularly positive, but let's see what happens on Friday when I do my next broadcast. September and October tend to be fairly negative. Okay, so risk averse, you'll get out. Risk loving, you might say, well, I'm in it for the long term. That was one of our special situations, was Tesla, from my Telegram channel, alpeshpatel.com/links, if you don't know where that is, from January. Now, this is where Meta is, sideways. That's still falling. That's going sideways. So it's early to tell if it's going to do this. I will keep you updated if it does, because we might be at this stage with it, which means we're just seeing the first moves. It's a pattern of this which is replicating itself. We don't know yet, so let's keep an eye on, so that I can let you know and say, as I did in February of last year, hey, I'm going to get out of Meta even though I was in it for the long term, and then I managed to avoid that fall, and then January of this year say, yeah, I'm getting in. I don't trade my investments, but that was an exception to the rule. Well, trade, I mean, it was one transaction per year, so it's hardly trading, is it? ServiceNow, which I like, again, forming a similar kind of base as it's done in the past. Is it now going through this phase? How do we know? Well, we keep a close eye on it. We'll see. If this dotted line goes downwards and then goes below the yellow, then I'm afraid it would be time to get out. If you're risk averse, you'd get out right now. If you're more risk loving, more patient, then you might say, well, it's like this. I know it could fall, it could rise, it could fall, it could rise. I'm just going to stay in it for the longer term. What you don't want to happen is see all those lovely little gains go there and then have a whole 12 months of it going down and then wait another year to go down. You know, you might say, well, I'll buy it, exit. These are not trading then. It's still investing. Okay. ServiceNow, there we go. Because even Warren Buffett does that. It doesn't hold some of the stocks forever. Cisco, well, I don't need to admit myself regarding that. I'm still holding it, but I'm keeping a close eye on it. Hope you enjoyed that. Hope that was valuable. Have a look at alpeshpatel.com/links. Like and follow for more. Put in the comments if you've enjoyed this. If you have, I'll do more. If you don't comment, I won't do any more. Thank you.